Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me is Seth, Wunder, Chief Investment Officer with Acorns. And for this segment, we are going to discuss starting the investment journey. Seth, it's great to see you. Welcome back to Trade Talks.
Yeah, thanks for having me.
Let's start with the basics. What is financial literacy?
Yeah, so financial literacy is about understanding where you are in your financial position in life and how to educate yourself and find the right tools so that way you can continue to plan for the future and really set yourself up for financial independence.
How do you start investing and building financial knowledge?
So there's tons of tools out there, right? There's lots of things you can read on the internet. There are mobile-based apps. You know, at Acorns, we have a tremendous amount of content that's built into our platform to help people learn even the simplest basics of how to think about what the stock market is and what stocks are and bonds at the same time. The best way to start truly is to be quite simple about it. Get yourself going with a small amount of investments, maybe $5, $10, $20, whatever works best for you. Get yourself comfortable with the idea of owning a broad-based ETF as a starting point for investing in the stock market. And I would think about it, kind of at a parallel path to if you were going on a diet or if you were going to go work out at a gym. You're not going to go run a marathon the first time you go work out, and you're probably not going to change your diet overnight to something that's dramatic. So it's all about those small steps in the beginning, getting comfortable. And then over time, as your knowledge base grows, we can start adding a little bit of complexity in there.
What is some advice you would give for young people or novices that want to start investing?
The younger, the better. And even the smaller is totally fine too. The math is really simple. If you invest $100 and the stock market was up 10%, you'd make $10. But if you invested $1,000 and it was up 10%, you would make $100. And obviously that keeps going. It's hard to start with the big number first because a lot of us don't have that when we start. So if we start young and we start small, eventually as you get older, the return on those bigger deposits or those bigger balances really add up. So the most important thing, start young, get yourself into a position of small amounts over time. And then as you get older in life, you'll really appreciate that you've started, maybe as a teenager in your 20s.
Do you need to know the technicalities of the market to invest?
No, I mean, certainly not when you start. Similar to what I just said before. So you can get overwhelmed trying to understand either whether it be technical analysis or what inflation or interest rates, all these big words mean to your investment style or the things that you own. When you start, the best way to think about it is you want to own, let's say, the stock market more broadly, a broad-based ETF. Over time, if you want to start picking individual companies and stocks or even bonds for that matter, that's where the technicalities of each, let's call it instrument or security, matters, and you'll educate yourself along the way. So I wouldn't get bogged down or overwhelmed by having to have too much knowledge in the very beginning.
And where and how do you start? How do you make that first move?
Yeah, so that's always, I get that question all the time. It's like, okay, fine, I get it. I'm ready to go do this. But now what do I do next? For the way we think about it for our customers at Acorns is you get yourself started by downloading our app, putting a little bit of money into our platform, getting yourself some exposure through ETFs and broad-based portfolios. That's usually the best way to do it, which is finding a trusted partner and a brand that you feel comfortable with, that you feel like you're getting the education and the process flow that makes you understand how you're investing. And then as you dip your toe in, obviously you can grow your account balances and so forth. But certainly, finding that sort of partner and that tool is a necessary step along your journey. And
finally, Seth, what's been your best investment?
I probably have two that come to mind. My daughter was born in 2009. And so just investing for her college from the time that she was born has been an amazing 12, 13 years in the stock market. And what's crazy about it is you look back at all the times where the market went down a lot and you get nervous along the way, but then you think like, man, like over the many years, decade plus, the market's return has really been quite phenomenal. So that's probably the best sort of family long-term planning. I mean, when I was a teenager, I was introduced to investing, and I used to own video game stocks back then. And it's just something like I knew really well. I was interested in it. It's a great way as you get a little bit more sophisticated in your investments, owning stocks and companies that you have a familiarity with usually works out over time. So, I mean, those are the two that come to mind.
All right, Seth, we appreciate the insight. Thanks for joining us for National Financial Literacy Month. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.